So as a bit of a warning, this video is not about hyping up a coin, but instead looking at it from a heavily fundamental perspective. So if you're willing to sit through the video, first off, thank you for being part of the investor class that does their homework. But secondly, this is the only level of fundamental analysis that you'll see on this channel, because we don't believe in shilling and we've never been paid to do so. But furthermore, this is what's going to define the industry as it becomes more professional and more mature. Gone are the days of the speculative Lambo hype, and instead we'll see utility as the driving factor behind what is successful or not. So to that end, let's talk about a sound competitor to Bitcoin. Mind you, not a replacement, but one that I believe pushes the entire space forward and does so in a substantive way. Let's talk about one of the most promising projects in the industry. Welcome to Ready Set Crypto. This is your brain on blockchain. So before we get going, I want to give a brief shout out to Checkmate, who wrote this video and is a solid member of our team as we continue to place emphasis on fundamentals and grounded discussion. You can join our community by heading over to readysetcrypto.com, where we have tons of content, classes, private discussion board, and really we aim to provide an island of trust and honesty in an industry that is mostly lacking it. So what is one of the most promising cryptocurrency projects in the industry, and what gives merit to recognizing it as a sound competitor to Bitcoin? The answer is Decred. And to give you a little bit of context, we've previously explored the comparison between altcoins and Bitcoin in regards to their monetary premiums, considering a simple methodology relating to scarcity as measured by stock-to-flow ratio to market value inspired by a methodology proposed by Plan B for Bitcoin. This study is important because it established the existence of a fundamental power law relationship for Bitcoin that acts as a valuable baseline against which fixed supply crypto assets may be compared. An outcome of our study was an observation that Decred has developed and maintained a convincing monetary premium. Not only is Decred's monetary premium more convincing than that of all the other competing altcoins, but in fact is even more so than Bitcoin in its early days. So let's dig into the depth of Decred's market valuation and performance to date and see that it's comparable to Bitcoin in its early history, a literal apples to apples comparison. So first though, why Decred and what is it? Well, Decred was founded on the same core sound money principles as Bitcoin, but differentiates itself significantly in three very meaningful ways. The first is Decred security and consensus, which utilizes an innovative and elegant hybrid of proof of work and proof of stake mechanism. It's been proven that this system can reasonably provide a superior ledger assurance and a higher cost of attack between 20 and 40 times per unit of market capitalization in comparison to Bitcoin. The second way is that it has a pre-established governance mechanism that allocates decision-making capacity and risk ownership to DCR holders. The governance system is comprised of off-chain signaling via Politeia, social media channels, and binding on-chain voting for consensus-level changes via the Decred ticket system. Decred governance is underpinned by a remarkably strong social contract that to date has proven its capacity for retaining community integrity and mindshare. The last reason is the distribution of block rewards allocated as 60% to proof-of-work miners in return for CapEx and OpEx cost, 30% to DCR ticket holders to incentivize governance participation and security, and a final 10% to the Decred treasury, which is owned and soon to be operated by Decred stakeholders. Decred effectively incentivizes participation of miners, stakeholders, and builders, in contrast to Bitcoin's 100% allocation to proof-of-work miners. In this light, Decred has a uniquely differentiated value prop amongst the landscape of crypto assets and represents a strong candidate for a long-term digital monetary asset. As such, Decred represents a valuable opportunity to study the early-age performance of a strong contender for digital money with the benefit of Bitcoin hindsight. So to that end, if we're really going to compare Decred to Bitcoin, we should perform a true apples-to-apples comparison. And to do so, we compare 3-year-old Decred to 3-year-old Bitcoin. Of course, we can't eliminate every variable, but I think we can do a justifiably good job if we assess three things. First, monetary policy, be that scarcity and supply side. Second, cost to attack security and consensus, through the lens of immutability and unforgeable costliness. And last, we need to assess the user base and activity on chain, otherwise known as the demand side. So first up, looking at monetary policy. The core value prop of Decred is near identical to Bitcoin in that it presents an opt-in, self-sovereign, and immutable digital store of value. Thankfully, this should be pretty familiar if you've been around the block with Bitcoin. It has 21 million maximal unit supply, it has 100 million divisible units or atoms per DCR, equivalent to the Satoshis of Bitcoin, and it has a deterministic supply schedule by block height. Decred's overall supply curve actually approaches that of Bitcoin, with near identical circulating supply estimated around March of 2038. But we're not just here to assess the similarities. Here are some things that are different between the Decred and Bitcoin monetary policies. First, Decred launched with an 8% pre-mine, with 4% of that airdrop free to early community members, and the other 4% purchased by the team at a rate of 50 cents per DCR. Bitcoin, of course, launched without a pre-mine, but its existence was initially known to only a small number of cypherpunks, and an estimated 1 million of BTC is still held by Satoshi Nakamoto. The second major difference is that the Decred block reward starts at 31 DCR per 5-minute block time, and the reward is distributed at a rate of 60-30-10, as we've previously covered. This compares to Bitcoin that started at 50 BTC per block, issued every 10 minutes, allocated in full to proof-of-work miners. The last major difference in monetary policy is that Decred's policy does not include a significant supply shock halving event, as Bitcoin does every 210,000 blocks or every 4 years. Instead, its block reward follows a smooth reduction by 100 or 101 every 6,144 blocks, equating to a reduction of approximately 0.99% to the total block reward every 21.33 days. So needless to say, they're pretty similar with slight differences. To illustrate the similarity between monetary policies, we can superimpose Decred launching at the block height when Bitcoin's circulating supply reached 1.68 million BTC, equivalent to Decred's initial pre-mine of BTC block 33,6000, to compare the progression of the stock-to-flow ratios and supply curves. What is immediately observable is that Decred's stock-to-flow development approximates the mean trajectory of Bitcoin and traverses the same set of stock-to-flow values. As such, if the fundamental relationship between stock-to-flow and value developed by Plan B is proven valid only for Bitcoin, well, it must be reasonably attributed to the combined influence of Satoshi's Immaculate Conception, first mover advantage, and halving events. So next, let's talk about monetary premium. Given the monetary policies and initial reward are arguably equivalent between these two coins, we need to formalize the actual market perception of value over time. In order to perform a fair comparison, I've plotted the market cap of Bitcoin, Decred, and Litecoin against the percentage of total supply mined. This effectively normalizes each project considering its stage in life. We can see in this chart this fascinating feature that Bitcoin, Litecoin, and Decred all converge to a market cap of 180 million at the point of 50% coins mined. It's very strange. What's also notable is that Decred and Bitcoin have retained a strong correlation to the stock-to-flow model proposed by Plan B. Litecoin did up until its first halving, however, ever since then it's shown much less promise, remaining well below the model at the majority of time since. So, in conclusion, as promised, this was a very heavy video, and if you've made it to this point, well done. What I want to stress to you is this is not me saying that you need to go out and buy Decred, that Decred is somehow infinitely better than Bitcoin, that there is a perfect blockchain project out there, or any other baseless prediction like that. Instead, this is an ongoing research venture, because the story of Bitcoin and Decred and the rest of cryptocurrency is still being written. To us, blockchain, Bitcoin, Decred, they're just in the first inning. And understanding what's going on behind the curtain, that is the conversations we should be having. But I want to hear what you think. What's your opinion of Decred? Do you see it as a legitimate Bitcoin competitor? Or is it something more or something less? Let's discuss in the comments below, and if you haven't done so already, make sure to get on our free newsletter so you stay up to date with all the things that are going on in the crypto space. As always, thanks for watching, I really appreciate it, and I'll see you in the next one. Cheers.